Okay, welcome to Chart Kit Saturday Review. I'd like to cover, especially today, the power of levels, which we think is really one of the few leading indicators. Most indicators are truly lagging as derivatives of price, but levels have really proven themselves to have some measure of predictability to it. Nothing's ever perfect in this business, and that's one reason it's important that we begin with a disclosure statement. Many of you have seen this if you've been in the trading world for a week or longer. You've seen this shown many times, and it's really worthwhile to read through this every once in a while to be brought to reality as far as the risks that trading brings to the table. These are not minor issues; they're major concerns. So. The assumption is that you take the time with this recorded video to pause it and read it. We have this disclosure. We also have another one that gives additional cautionary statements and also how we operate our business at ChartKit. So take the time to do that. First, a very brief word about who I am if you're new to my world. I spent most of my time in the automobile business. I was a co-owner of a multi-franchise new car and truck dealership in the Philadelphia market. Enjoyed many years there. Enjoyed so much about it. I enjoyed the sales and marketing side. I enjoyed the people side of the business, both clients and also the folks that were team members of our organization. And then followed that, having sold the business, I joined one of 12 original members of really a global consulting company. It grew to 300 consultants or more in 19 countries, primarily serving, providing financial advice to automotive manufacturers and also large auto groups such as um, oh, um, Roger Penske and many others. Quite a long list in the years that I spent there. But I began trading in the mid 1990s, if I recall correctly, probably in the option world. So I've had since then well over 20,000 hours trading, and I guess 22 years, I think, going on this year. And I have no degrees in the advisory role. I'm not certificated in managing your money or whatever. That's certainly a responsibility. But I do have real world experience in terms of what, at least for me, seems to work and what doesn't work. So with that in mind, let's jump right in. We're going to cover three indicators that we offer, which would include, let's go ahead and we'll drop this one off. Three indicators. Yeah, I know it's a busy chart, but we'll declutter this in a minute. This chart includes the fair value gap indicator, includes the initial balance or open range indicator. I'm not sure, you could use either term, I guess, for that instrument. And also our bankers trading strategy, or BTS, which is a cluster of 27 different levels. I'm not going to say that these are the only levels that are influential to price, but for me, they certainly have proven to be helpful in understanding where I can expect price reaction of one sort or the other. Let's just take a look as we declutter this chart, at the fair value gap indicator. First of all, you can see that we've got on this 15-minute chart, we have higher time frame fair value gaps. There's a 60 and a 240 or 40-hour fair value gap right there. They have yet to be mitigated. When these fair value gaps are mitigated, you'll see an M in parentheses. So this bearish fair value gap, the 1 hour fair value gap, was mitigated right here. I like that because it tells me right away if that gap is going to be an influence or not, or at least have the tendency to be an influence. You can also establish whether the mitigation is set by just simply a pierce and pull back, or whether it's a close beyond that fair value gap. And I prefer the close setting to see that gap would be mitigated. The other thing we've done is you right click on the chart and you can get rid of those fair value gaps just with a click of the mouse. So you can declutter your chart, remove them all together, or put them back on if you want to revisit where price might run into some resistance or support. The other thing that we have here is the bank traders strategy, the BTS. That's the 27 levels that I mentioned. They're all listed along the side here. They are anywhere from the intraday levels to up as far as a month. For example, here's the down at the bottom right, you can see the that's the prior weekly midline, and here's the prior month POC, or point of control, right here. And you'll see how that point of control comes in favorably just this past week on Tuesday. And by the way, this is August 15th, 2026, so we'll take a look at that in a second. The other part of BTS are these green, gray, and maroon areas in here. This is built on the prior day high and low. One significant level in that device is the the prior day mid right here, the PDM prior day midline. You can see how price, as it so often does, came down and tapped that line and gave us a little bit of rise towards the close of business this past week on Friday. That also aligns pretty well with this dashed blue line, which is actually part of our initial balance. That's this rectangle that you see here. We like to use the first hour of the business, and it establishes, and that develops as time goes on. You'll see that yellow border evolve as price progresses throughout the morning, and it finally becomes fixed and frozen at the end of the first hour at 10:30. But it'll generate this midline, which we find to be very influential as far as price reaction areas. And you can see it again right here. Came down to this area, touched the prior midline, which is the PDM, but it also was dancing around that midline from Thursday. You can see we put the date on here so you can know right away that that was the prior day's initial balance period right there. A couple of other lines on here that are significant are what we call the range high and range low. That's these bold magenta lines right there. The range high, range low. You'll see as you look at past charts that they tend to speak to price, or price speaks to this, one or the other. Here it came up, approach, came back down, and what did it do? It hit our prior day midline, came up, broke above that range high right here, and it was off to the races from there. But if you just stroll back, you can see the price tends to want to behave in a, I'm not going to use the word predictable, nothing is in this business, but it does seem to have some relevance. In our 12-page, I guess on this indicator, I think it's a 7-page, very detailed user manual. It explains how we calculate that and its derivation. Something else I want to show is back here, something really can be helpful. And I'm going to go ahead and advance to the next chart here. It's the same chart, same 15-minute chart, but I've decluttered a lot of the lines, which you can do on our indicators. You can choose which ones show and which don't. And I just left a couple on here, most especially the prior week's POC, which is this line right here. And you can see that trailed all the way from Friday. If we go right here, here's the prior week POC. We knew that was there the whole week as the week developed. But notice what happened here. You go back to Tuesday of this past week, and you see that it came right down to that POC level, which is a high volume level from past activity, and elected to reverse to the upside there. And what did it do? It moved up to the range high, came down and retested, and then gave us a little bit of a bump right there. The other thing that was very interesting is that if I jump to another chart, you can see this is that same prior week POC right here, and it's this Tuesday, the same day. Price came down and tapped it, but we also had, this is another indicator of ours, which prints a series of moving averages, actually 6 of them. We used the 15-minute, the 1 hour, the 4 hour, the day, the week, and the month. And this happens to be the monthly moving average. And what's nice about that particular indicator is that regardless of the time frame chart that you're using, it automatically computes the moving average that would represent those 6 time frames. So it's a nice way to see a multi-time frame analysis on one chart without too much clutter. But what we loved about this move right here is price came down. Oh, again, notice how it comes down to the range low. There's the range high up here, and notice it tapped it. Came down to the range low, retested it, came right down to that prior week's POC right here, and almost touched the monthly. So we knew ahead of time that, it's at least it's a spot to keep an eye on. We don't know what it's going to do at this point, but it's kind of a raise of hands to take a closer look at the chart and maybe benefit from subsequent price action. And certainly, if you were let's call you an SMT trader, and you like to use mitigated fair value gaps, and I'll just draw this one manually. I'm going to draw that roughly from there to roughly there. You can see that this fair value gap on the 15-minute chart was mitigated right there if you're using close above as your mitigation factor, and that was off to the races from that point. And late in the day, although, but nevertheless, it might have given you some confidence or some confirmation that maybe we're going to see a move away from these significant levels right here. So that's basically what we wanted to show you. I don't want to get you mired in all the weeds on all these the various lines here, but just know that we have price targets on here that are based on the prior day high and low, generated from the midpoint from yesterday's high and low. We have all the session highs, session lows. We have the daily open, and by that we mean the open at the Asian the day before, which is considered the global trade day. And we also have what's called the regular open, which would be the 9:30 open as well. We have the current week high, current week low. We have let's see, we have yesterday's low, yesterday's high. We have, we talked about the prior week point of control. We also have the prior week's midpoint, and we have there's the prior week's low right there. So we have any number of those, and they're all modifiable as far as type of line and also thickness and color and that sort of thing, as we do with most of our indicators, giving you the freedom of choice, because we don't know whether you're going to use a dark color background or a light colored background chart. If you do have an opportunity, we would certainly encourage you to, what I might want to do is show you an example of our user manual. This is the BTS, the Bank Trader Strategy levels. And here's our location right there, chartkit.circle.so. You can see it's a very thorough user manual, table of contents, very professionally done, and we suspect that's some of the training I got, working with Fortune 50 companies, and so seeing people how they did things in a professional and effective way. Give you advice on the installation, activating the license, any chart requirements, and basically this will work on certainly any intraday, because you're looking at intraday levels on here, so you want to have enough data loaded up so that at least you can capture the weekly and monthly. So if you put this on a 2-day data series chart, you're not going to see the weekly and monthly data because you haven't provided it. The time period is too short. Our levels, how they're calculated, any of the definitions, the 3 zones we talked about. Remember the green and the gray and the maroon, dark red zones that we talked about. The range bands, session levels. You can set your time to whatever depending on your time zone. You can make those alterations. Weekly levels, time zones, the data box. I guess I didn't show you the data box. That's kind of a neat feature. Maybe I'll come back to that at the end here, and we'll finish up shortly rather than burn too much of your time. The labels, setting preferences, just a wealth of information reading tips on reading the chart, troubleshooting, and at the end a glossary, and there you are. Let me just go back to this up here. I hope it's not too small for you. I could make it bigger, but I won't take your time for me to do that. What you see here is a user-defined number of periods. You've got at the top, I like using a 21-day ADR to see what the average, and these are in points, 637 points for the NASDAQ, the NQ. Here's the 10-day, here's the 5-day, here's the 3-day, and here's yesterday's. That was, I know this is Saturday, but the chart's closed down now with markets being closed. So yesterday was actually Thursday, and then today would have been Friday yesterday. So if you remember, Thursday you had a huge upswing, almost 500 points move on that. But as is so often the case, the following day you often see things kind of settle down and become a little bit of a slow market. And we can see that it was almost about half the range on Friday after that big move up. So that shows you that would be a heads up as to a possible price behavior for the day following such a big move. So that's part of the BTS as well. And again, it's all user configurable in terms of colors and also the settings for that. We as a trader who develops these tools, we know what what we like and what we don't like, and what most traders like and don't like. And it's one of the benefits, I think, of coming to a place that builds these based on daily experience, and as opposed to someone who's just strictly a coder or a programmer who doesn't have much appreciation for how the markets actually operate. So if you have time, we do invite you to visit our website. It's a straightforward address, just chartkit.circle.so, and it'll bring you right here. And takes you time to walk through and see the many indicators we have, and also strategies. We're a great fan of taking a strategy. Indicator. You can see so far we've put about 10 or so indicators, and we're continuing to build that list. But what we like to do is to take the ones for which it makes sense to convert them into strategies. For example, here it says day, week, month moving average. That's using really the 6 moving averages we spoke about earlier, excuse me, and turning it into a strategy in NinjaTrader, which gives us the advantage of having more control, if you will, over our setups, to include auto entries, auto exits, trailing stops, kill switches during the day. Gives us the opportunity to set time filters, and a wealth of advantages with the strategy. I'm not sure how much. If I click on this, here's a strategy report from a past performance. Here's another one here. Again, these are simulated trades, and again, always be aware of the risks. The risks are ever present; they don't disappear. And they will definitely reappear in no time if you take your focus off of managing risk. So that's again one advantage of strategies. You can build that into the strategy. So we offer those as well, and we have a chat room that will post our view of the markets. For example, here was just Friday. I think we already talked about this. Here was this is a volume profile stretching over the whole prior week, not this past week, but the week before. And then during the following week, this was that Tuesday tap of the POC that I discussed earlier, right here. So this is built on raw data. So if you were trading this and you had our BTS indicator, and you knew that this was a level to open eyes and open ears and pay all attention, you would have been in the know as to the potential for a price reaction at this level. And boy, did it react. I mean, it just took off, didn't it? And there was that strong day on Thursday, followed by a day with less activity here. So if you would stop by, take a look at it, and it's an easy process to part with your money and take advantage of some of our, what we think are pretty unique creations in the trading world. We don't know it all, but we're great learners and love to learn every day from what we do, but also from what you feed back to us in your own trading experience. So thanks again for taking the time spending with us. Look forward to doing business with you in the future. Take care.